my situation when I look at Facebook is that I see a company which is that revenue is not going anywhere. Their cash flows are not going anywhere. I think those are pretty solid. I think the user base is pretty solid. So if I were to look at Facebook, I would say that even with 5 or 10% annual growth, which doesn't really seem like a big leap for them to get to, the stock ought to be a double at current interest rates. So I don't have any issue with saying that Meta in 2 or 3 years is an easy double. I think that's a reasonable bet.
Now, what you just watched was a clip of Mohnish Pabrai, one of the world's most famous investors and author of the book The Dondo Investor. And whenever we hear investors like Mohnish Pabrai, Warren Buffett, or Charlie Munger speak about a certain investment, it should pique our interest given their crazy good track records. So in today's video, I'll be doing my absolute best to answer the question, is Meta stock cheap or a value trap at $215 per share? I'll be going over the bear case and the bull case to try and be as unbiased as possible, and then at the end of the video, I'll be giving you my price targets for Meta stock by the end of year 2027. And before we get into the video, I just wanted to take a moment to truly thank you all so much for watching my videos and supporting me as a creator. By the time you're watching this video, my channel will have probably hit 30,000 subscribers, which I'm incredibly grateful for. It honestly means so much to me when I see your positive comments and all the likes on my videos, and it just motivates me to keep producing high quality content for you guys and just providing as much value as I possibly can. And finally, today's video is sponsored by The Daily Upside, a totally free finance and business newsletter, but more on that later. Alright, so starting off with the bear case for Meta stock. The first thing anybody would warn you about investing in Meta stock is that Facebook is a dying platform. For the first time in the company's history, Facebook actually saw its daily active user count drop on a quarter-over-quarter basis in Q4 2021, which was quite alarming to investors. However, Facebook did still see growth of 2 million users in the quarter when considering the monthly active users. But overall, there's no denying the fact that the Facebook platform itself is seeing stagnating growth. And honestly, this totally makes sense given that the platform has nearly 2 billion daily active users and nearly 3 billion monthly active users. It's just not reasonable to expect a platform that has over a third of the world's population on it to continue growing at rapid rates. Now, I also found this statistic online showing that Facebook is the favorite social platform for users within the age range of 35 to 44 for men and 45 to 54 for women, while Instagram takes the top spot for users under the age of 25. So clearly, Facebook does appeal more to the older generation, which isn't that great when considering the future growth of the company. But since Meta also owns Instagram, this could be seen as a positive where the company covers a broad range of user interests. Now, the second bear case against Meta stock is that they're facing strict ad targeting headwinds from Apple iOS 14 changes, as well as the changes that Google will be implementing in the near future. The iOS 14 changes really only started to impact Meta in Q2 of 2021, which impacted advertising efficiency on the Facebook and Instagram platforms, leading to advertisers needing to spend more money to achieve the same results. So the expectation for the upcoming quarter in Q1 2022 is that the company is going to be lapping a period where these iOS changes didn't impact the revenue at all. And therefore, revenue growth is expected to slow to between 3 and 11% year over year. Furthermore, recently after their last earnings report, Google announced plans to change how Facebook and Instagram will be able to track Android phone users. Now, I did a quick search on the iPhone versus Android operating system market share, and here we can see in December 2021, Apple iOS accounted for about 29% of total phone users, while Android accounted for a whopping 70%. So the damage that Google could do to Meta's business model could be far more substantial than what was done by Apple, which was estimated to be about $10 billion of impact in 2022. Now, it's unclear whether or not Google's changes would impact Meta the same way as Apple's changes have, and they will be doing it over a multi-year horizon, so the impact shouldn't be as sudden as Apple's iOS 14 changes were. But nevertheless, I do believe it's something that you need to be concerned about if you're investing in Meta. The third bear case argument for Meta stock is that they're facing fierce competition from TikTok, forcing Meta to change the way that they're displaying their ads to their users. Many would argue that the most valuable currency of today's digital age is attention, and TikTok has found a way to keep its users engaged for a very long period of time with short-form video and an impressive algorithm that even Mohnish Pabrai said reads his mind. Unsurprisingly, in 2021, TikTok became the world's most downloaded app with 656 million downloads, being over 100 million more downloads than Instagram received last year. As a result, Meta said in their Q4 2021 earnings, "We expect continued headwinds from both increased competition for people's time and a shift of engagement within our apps towards video services like Reels, which monetize at a lower rate than Feed and Stories." So obviously, TikTok is beginning to eat away at Facebook and Instagram's market share, which is why Meta is putting this huge focus on Reels now. However, on the conference call, Meta's management was asked if they would be able to make this successful transition to monetizing on Reels, to which they said they were quite confident since they have successfully transitioned from feed to stories monetization in the past. Personally, I don't think TikTok is as big of a threat to Meta as many investors might think it is, because I do see it as a completely different social platform that can coexist with Facebook and Instagram. People primarily go on Facebook and Instagram to see what their friends and family are up to or to see memes, while people go on TikTok to see random content creators make video content, just like YouTube has been doing for over a decade now. So yes, TikTok will take some market share and user engagement from Meta, but I don't believe it's going to replace Facebook and Instagram by any means. All right, now before we get into the bull case for Meta stock, let me quickly tell you about today's video sponsor, The Daily Upside. The Daily Upside is a free business and investing newsletter that over 300,000 people subscribe to, including myself. Every weekday, they deliver a morning brief followed by some more detailed stories that are shaping the business world today. It's become something that I personally enjoy reading in the mornings as it's informative, witty, and not dumbed down. Recently, they just had a piece covering the cinema giant AMC's offer to take a 22% stake in Highcroft gold mine for $56 million, which seems to fall right in line with popular investor Peter Lynch's term diversification. Even the CEO of AMC, Adam Aron, acknowledged the deal will surprise investors, but pointed to similarities between the movie and mining firms' trajectories. So personally, reading this changed my entire view about AMC as a potential investment, and I would not be touching it after this diversification. Anyways, as someone who looks to stay on top of financial news to create videos like this, I can't recommend the Daily Upside enough. So make sure to sign up using the link in the description below, absolutely for free. And with that said, let's get back into the video. All right, now moving into the bull case, my first point is that even after the recent bounce in Meta's share price, Meta stock is still deeply discounted when compared to other stocks with similar growth rates. Here we can see Meta reported full year 2021 EPS of $13.77, which was a 36% increase year over year. And if we divide their stock price of $216 by $13.77 of EPS, we get a trailing PE ratio of 15.7. Now, if you know of another tech stock that grew its EPS 36% year over year and trading at a PE ratio of 15, please let me know in the comments below, because I don't know of any. I believe that at the current valuation, Meta stock is priced for such little growth that there's very little downside to it. And it really doesn't make sense when we compare Meta stock to companies in other sectors that are growing even slower. For example, PepsiCo has a trailing PE of 28 and grew its earnings 5.3% per year over the last 5 years. Coca-Cola has a trailing PE ratio of 25 and grew its EPS 1.9% per year over the past 5 years. Then Procter & Gamble has a PE ratio of 25 and grew its EPS 4% per year over the past 5 years. And finally, Johnson & Johnson probably has the most realistic valuation of all these consumer staple stocks, with a PE ratio of 21 and grew its EPS 10% per year over the past 5 years. But all of these are still more expensive than Meta stock that recently fell to a PE ratio of 13, having had EPS growth of 42% per year over the past 5 years. There's just no comparison whatsoever, guys. Even with Meta only expecting 3 to 11% revenue growth in Q1 2022, which should likely re-accelerate later in the year as they start lapping those Apple iOS 14 periods, the valuation is still ridiculously cheap in my opinion. My second bullish point for Meta stock is their unbelievable profitability that we can't ignore. In 2021, Meta produced revenue of $117.9 billion and gross income of $95.3 billion, which translates to a gross margin of 80%. This is insane, guys, and is matched by very few companies in the tech industry. We can even check out their operating margin, which is their operating income of $46.8 billion in 2021, divided by their revenue of $117.9 billion, giving us a 40% operating margin. That means for every $1 of revenue that Meta gets, 40 cents goes straight to pre-tax earnings. So even though everyone complains about Meta investing so heavily into AR and VR technology and the metaverse, they have the profits to do so. Even if ad rates were to drop suddenly or we were to go into another recession, just like what happened in the COVID crash, Meta still produced $5.9 billion of operating income in their worst quarter of 2020. We can also see here that Meta has steadily grown their EPS over time, with a few hiccups here and there, but overall the trend is clear. And I believe this should only continue upward as the average price of an ad keeps climbing. Despite what you may think about Meta, they're continuing to gather more and more ad advertising dollars, as digital ad spend will continue growing across the US and all other major markets in the world. And so I believe that Meta has the potential to grow their average revenue per user, or ARPU, in many other regions of the world to a similar place where the US and Canada are right now, which would provide them massive revenue growth in the future. Finally, in my third and last bullish point here, we need to talk about the Metaverse. Now, the Metaverse investment is extremely controversial among investors, and I can see both sides of it. On the one hand, Meta is taking a huge bet on something elusive and far out into the future, and they really have no idea how profitable it could be. But on the other hand, Meta is continuing to innovate and invest into the future of the business so that they can continue delivering these high returns for shareholders. Personally, I'm still undecided on which side of the fence I live, but what I can't deny is how successful their Oculus Quest 2 VR headset has been so far. From Google Trends, we can see that the search interest for the term Oculus spiked to its peak right after Christmas this past year, being the highest level in history. This was later substantiated by the fact that Oculus became the most downloaded app in the App Store right after Christmas. And even nowadays, we can see the search interest is still higher than it was before Christmas in 2021, which is great to see. So as long as Meta can continue coming out with killer products over time and prove that their Metaverse business is actually going to be very successful in the future, I think investors will open up to it and they should see a much higher valuation. All right, but now the moment you've all been waiting for, let's take a look at my price targets and valuation model for Meta stock. So basically what I did is I took all the analysts' EPS forecasts from Yahoo Finance for this year, next year, and over the next 5 years and plugged them in here. Then using 2021 EPS of $13.77, I was able to project the future EPS for Meta all the way out to 2027, which came to $28.54. Finally, I applied a future 2027 PE ratio of 20 for Meta stock, which I still believe is too low given it's an innovative tech company, but I like to be conservative. And after doing all of the calculations, that brings us to an end of year 2027 price target of $571 per share, which would be over a 2.5x in 6 years, or a compounded annual growth rate of 17.5%. And keep in mind, analysts are typically very conservative when it comes to these numbers, so we could expect returns north of 20% per year by investing in Meta stock at $215 per share. But as always, this is just my opinion and not financial advice. So overall, yes, I do think that Meta stock is a buy right now. I do think it's cheap at these current prices, and I will continue buying because I'm very bullish on the company long term. Anyways, if you did enjoy the video, don't forget to hit that like button to help support my channel, and don't forget to subscribe so you don't miss any of my future uploads. And with that said, I will see you in the next one.